Markets are rising but on the shoulders of a few giants. In a slower growth world, concentration risk is back. From India to Australia to the 800-pound gorilla, the United States, the global economy is navigating reduced growth and heightened policy risk. Some stocks are surging, but most are lagging behind. The game has changed. Advanced economies are expanding at under 2% on average. India is still growing faster, but its momentum has cooled. China's pace is moderate. Russia, amid conflict, has slowed to a crawl. The bottom line here is that the post-COVID catch-up period is behind us. Growth is now modest and quite uneven across the globe. What are the markets telling us? Well, the signals are mixed. Precious metals have leaped roughly 2/3 higher this year, while broad equities and crypto are showing more modest gains. It seems investors are looking for ways to hedge against inflation, policy uncertainty, and currency risk. This brings us to the concentration problem. Today's S&P 500 is incredibly top-heavy. The Fab 5 megacap stocks collectively represent about 27% of the entire index. In fact, fewer than 10 stocks have driven well over 1/3 of this year's returns. So if you're buying an index fund, you're really just buying a handful of winners. Any stumble from one of these giants can hit portfolios hard. So, what's a potential strategy in a market with a narrow rally and broad risks? Balance is key. One approach is to keep a core of US large caps about 50 to 60% of your portfolio. Then, tilt 20 to 25% toward faster growing markets, like India or other select emerging markets. Finally, reserve the remaining 20 to 25% for hedges, such as precious metals, inflation protection, and stocks of companies with sturdy cash flow. A few quick country notes. For India, you get higher growth, but if you're investing from abroad, keep an eye on currency fluctuations and inflation. For Australia, it's wise to diversify globally and not rely on domestic growth alone. And for the US, stay invested in your home market, but be very mindful of that internal concentration within the index. Thanks so much for watching. If you found this helpful, please hit that like button and subscribe for more insights. See you next time.